This is Wendy.
Wait.
Sorry.
Now we're starting.
Hi, this is Wendy Sweet with Jonathan Davis. We're with Carolina Capital Management, and so glad to see you right now. Things are a little bit crazy, aren't they?
Yeah, it's a definitely new times about us, isn't it?
New
Yeah.
times, and I can tell you that when this first started, this virus thing first started, I really thought that it was going to be, a few weeks down and we're going to get right back to normal and
Yeah.
in no time flat, right?
Yeah.
And, I still want that in my head, but I'm not so sure that's exactly what's going to happen from what we're hearing. And I feel like we're on town meetings and conference calls and all kinds of things with, experts,
Yeah.
and people across the country just trying to keep up with what's going on. And, it changes by the minute. But it's important for us as investors, real estate investors, to really kind of get a handle on what's going on.
Mhm.
First thing that happened is our secondary market shut down.
Yes.
So we're absolutely not able to be able to do those longer term loans that we were doing, right?
Yeah.
So we've got money and we'd like to lend it all, but we're kind of afraid to right now, aren't we?
Well, I don't know if we're afraid to.
We're scared.
It's the issue is with everyone. We don't know how long this is going to take, or
what the values are going to be.
And everyone's worried, like, what's the value going to be? Are we going to see like a 30% drop or something extreme like that? It seems unlikely. It seems really unlikely. The issue is that when we have single families that we're talking about right now, if people go to fire sale them to create liquidity for the short term to help them feel safe and secure, they are now creating comps for whatever happens.
That's right.
Down the road.
Mm.
And so will there be a decrease in value? Probably. What is that going to be? That's what everyone's trying to figure out.
Right? Yeah. In fact, Aaron Chapman, who's a famous mortgage broker and one of the greatest guys I know, was talking last night on a town meeting that we were in. He was talking, and I thought what he said was really, really interesting. He referred to the rental market, as single family rental market, as possibly one that will become stronger and stronger from this, because now that people have been in this stay at home phase and they've got their kids screaming in the background while they're trying to work, and wife talking in their ear, their husband talking in their ear.
They might want a little more space.
Yeah. Yeah. So he was saying that he really thought that the rental market would pick up on something like this, single family rental market.
Yeah. Single family detached homes. Yeah. I mean, that's definitely a possibility. How, I don't know the number behind that, like how many people with kids live in apartments right now. I don't know.
Right.
But, I'd imagine eventually guess it's a big number. And then it becomes, can they afford to transition to that single family house?
Right. Well, if the stimulus package really works like it's supposed to, and we're all, praying that it will, that should blow over quick. The other thing though is, how are they going to qualify? Because I just heard this morning that domestic violence is up 18%. I thought that was an interesting statistic. And I don't know that it's just spousal abuse that's going on, or it could be with your kids too. You want to strangle them.
Yeah, I mean,
go outside.
Yeah, it's definitely an interesting time. I mean, I think a lot of us use work as a distraction from our families.
Right.
And now you're being forced to do work with your family.
It's hard to do.
And it's a hard transition.
You've got 2 little ones at home.
Yes.
It's hard to do that.
Yeah. I was on a call yesterday, and, I had it like they were upstairs by my office just screaming. I'm like, what are you all doing? Just get outside, but
and they're girls, so they tend to be a little louder anyway.
And they're full spirited, that's for sure.
That was well put. Was well put. So I've been getting a lot of calls from two different things that I was really, really surprised that people were calling about this, but they're nervous about refinancing their rental properties. And I told them not to be nervous because they can't do it right now anyway. It's the secondary market has just really shut down. So,
and if you all don't know what the secondary market is, that's where all of these mortgage loans, conforming, non-conforming, get pulled together and sold to large hedge funds or, Wall Street or, wherever it goes. And they collect the yield on those.
right,
And right now, no one knows what's going to happen.
right.
Primarily with the values, but also like they don't know like what they should buy these things at what premium for, because they have been buying that premium. It's like, what do you buy them at?
That's
We
right.
we don't know. So everyone's just kind of hit pause, and now we're all feeling the repercussions of that.
That's exactly right.
I wanted to refinance my house, and now I'm just like, man, I'm gonna wait a few weeks and see what happens.
If you're just now joining us, again, my name is Wendy Sweet. This is Jonathan Davis. We're with Carolina Capital Management. And if you have any questions, you can go ahead and type those in. We can answer them for you right now because we can actually see that.
We'll do our best.
That's exactly right. And if we don't know the answer, we'll make something up really good. Also, please remember to like us what are some of the other things they can do when they like us and promote us and give us the thumbs up, share us.
Yeah.
That's the other thing, is share us with other people. In fact, and subscribe. We are also at 1:00 today getting ready to do another presentation that will actually, I won't be on it, but we'll have some pretty incredible fund managers and real estate investors across the country that will be on here just talking about what they're faced with every day.
Well, let me ask you, like, are you personally pressing pause on buying investment properties?
Well, that is a great question. And the answer to that question is no.
Okay.
I'll tell you how it's changed me. I am looking at everything as a possible seller finance deal. And as a lender, I hate to hear someone else say that, but but it's a fact. This is a great opportunity for those sellers that are really anxious to get things sold, that maybe at this point they will consider doing seller financing, even if it's just for a balloon payment in 1 year. Or a balloon payment in 6 months. That's enough time for me to get in there, get it rehabbed, and get it on the market so that when things do bounce back, I can either, hold it as a rental property.
Well, it's a win-win for everybody, because the
right.
seller financing, they're going to get some kind of money down, which gives them liquidity, what they're looking for.
That's right.
And allows you to go in and take on this project and, see what happens in 6 months.
That's exactly right. So as a lender, and I love that you were the one who actually came up with this idea first, and that was to reduce our exposure. So if we're doing it as a lender, you as a buyer need to do it as well, right?
Yeah. We're pushing our LTVs back, and everyone who is still lending, who hasn't hit pause or closed, they are. You can expect between 5 and 15% lower LTVs across the board with everybody.
Right.
So with that in mind, know that you should probably be offering a little bit less, calculating that into your offer.
Right.
So.
Right. We're sitting at 65%.
Mm-hmm.
The other thing that we're doing is we're collecting interest at the closing for up to 6 months.
Yep.
Now,
6 months of interest at close, 65% LTV. But we will, if you find a good deal, and that's what we're saying, calculate this in. If you find a good deal in North and South Carolina, we will still fund 100% of the purchase and rehab as long as it's under 65%.
Right.
And that's what we do that no one else will do in the Carolinas.
And it's protecting us, but it also protects you.
Yes.
That they have a great saying that if your lender won't do the deal, it's because it's probably not a great deal.
Well, yeah. So we only make money if we make loans.
That's right.
If we're refusing to make a loan, there's probably a really good reason for it, and you should reanalyze that offering.
Yeah, I had a guy call yesterday. We've been working with him. He highly qualifies for a loan. He's got plenty of money in the bank. He's got a great credit score. He's just a great borrower, good experience. He's trying to buy a quad in a small town in South Carolina. And we got a call from the appraiser saying, hey, you know, the closest comp I can get is, 20, 30 miles away. So as a lender, that doesn't really scare me because I get it. It's a small town. There aren't a whole lot of quads that sold in the past 12 months that are going to be really close by. So as a hard money lender, I can think inside that box, but that's not what I'm worried about. What I'm worried about is getting him out of our loan.
Yes.
Because no other lender, no conventional lender is going to refinance that out of our loan with a comp that far away.
That's tough.
And so as I'm telling him about this, I also said, you need to think about your exit strategy too.
Mhm.
Are you going to own this quad for the next 20 years, or you think you might sell it in 5 years?
Yeah.
Because your buyer is going to run into the same problem that you're running into. And then your exit strategy is cut short.
Yeah, the only way that you can really exit stuff like that is local banks and small credit unions that are all local who understand that and want to help their economies. If you try to go to a Bank of America and get that thing, it's going to be tough.
And then he had to weigh. He said, well, I've got the cash. I can just pay for the whole thing myself.
Mhm.
But do I want to really let go of my cash on hand
Mhm.
at this time? Well, that's a great question. My crystal ball doesn't work anymore. It broke in 2007.
Well, I will tell you this. In a good market, the most expensive money that you can use is your own. In a poor market, just, figure that one out.
Same thing. We thank you so much for listening to us today. And I hope that you're going to join us at 1:00 today.
Yes.
You can go to Carolina Capital Management. Is that our Facebook page, or Carolina Hard Money Facebook page
Mhm.
to get online and see that, or right here at this YouTube channel, right?
Yeah, exactly.
Awesome.
All right,
Thanks so
see you then.
much.